when we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity.
Before we dive in, stay with me until the very end, because what Bill Holter reveals in this video could reshape how you see gold, silver, and the entire financial system. We are at a point where silver could break $50, gold is pressing against record highs, and the world is quietly preparing for a massive revaluation. Holter says this is not speculation. This is 1,000% certain. If you've ever wondered why countries are rushing to repatriate their gold and silver reserves, or why central banks are buying more metal than at any time in modern history, this episode will connect all the dots. By the end, you'll understand why a failure to deliver on Comex could ignite a chain reaction that ends with silver at triple-digit prices and gold rewriting the financial rulebook.
Yeah, I think your comment, the gloves are off, I think that's up until this point. I mean, it would be extremely easy to break the Western financial system with $5 or $10 billion. I mean, if you went into Comex and LBMA and said, "Here's $10 billion, I want metal," it'd be over. There's no way to deliver that kind of metal short term. So it would break the markets. In the past, I want to say that Russia, China, the rest of the world were being polite because they didn't want, they didn't want bombs raining down on them. One of the big things, the reason the dollar has been the reserve currency for so long is the U.S. military. Basically, we forced the world with threat of the U.S. military. If you don't use dollars, I mean, look at Saddam Hussein. Look at Gaddafi. They both talked about, 15, 20 years ago about doing a gold-backed currency. And what happened? They were killed. Mm-hmm. In the past, countries have seen, those two examples, Gaddafi and Saddam Hussein. They saw those examples and said, well, yeah, we'll just buy it quietly. And now that the war of words is on, it would not surprise me to see either a country or countries together step up. And the Achilles heel to the Western system is the fractional reserve nature of the entire system. But the way to expose that is just create a failure to deliver in either silver or gold, and it'll be both within 24 hours. If either goes, the other's going to go within virtually immediately. Seas. The rest of the world wants to get out from under Uncle Sam's boot, if you will, by using dollars. They don't want to use dollars, and they prefer not to be in the SWIFT system. I mean, ask Vladimir Putin. The U.S., the West, stole 300 billion plus of U.S. treasuries going back to, 2023, October 2023. And you can look at a gold chart. The following day after that news came out, the price of gold started going higher. It's been like a tractor in first gear. The pullbacks, or what used to be smashes, have been very, very shallow. And here we are, we're breaking out, we're new highs on all-time highs on gold, 14, 15-year highs on silver. We're entering a new phase right now. And I think that new phase coincides with the Western bond market. Think the Western credit system is faltering. And it just makes sense. If the credit system's faltering and everything is based on credit, you want to move your assets into something that cannot bankrupt. And that's gold and silver by definition.
Bill Holter opens with a stark prediction. Once silver clears $50 an ounce, there may be no stopping it. $100, $200, even $600 silver is on the table. He warns that in today's manipulated markets, price projections are meaningless because the true range is effectively 0 to infinity. The macro backdrop is adding fuel to the fire. Gold prices are hovering near record highs, around $3,655 per ounce, with December futures already trading close to $3,700. Weak U.S. jobs data, a softer dollar, and relentless central bank demand are driving expectations for a rare jumbo Federal Reserve rate cut, possibly as soon as this month. Goldman Sachs and other major banks are now openly forecasting gold could push toward $4,000 or even $5,000 per ounce within a year, setting the stage for what could be the most explosive metals bull run in decades. Holter makes a dramatic point. The Western paper gold market could be broken with as little as $5 to $10 billion in concentrated buying. Comex and LBMA simply do not have the metal to deliver against such orders. This is why he believes Russia, China, and other nations have been quietly accumulating physical gold and silver for years, not just to hedge, but to prepare for the eventual implosion of the dollar and treasury markets. He points out that the dollar's status as the global reserve currency has long been backed not just by economics, but by military might. Nations like Libya under Gaddafi and Iraq under Saddam Hussein that tried to introduce gold-backed currencies were swiftly removed. But now, the gloves are off. Countries are no longer hiding their intentions. The theft of over $300 billion in Russian reserves in 2023 was a turning point. Since then, demand for gold has been like a tractor in first gear, slowly but powerfully pulling prices to all-time highs. Silver is showing even more dramatic strength, climbing to $42 per ounce with its biggest rally since 2011 and up 47% year-to-date. Institutional investors, ETFs, and sovereign buyers are all flooding into the market, while physical supply remains in deficit for the fifth straight year. Futures contracts are now being held to delivery rather than cash settled, which signals a growing demand for real metal, not paper promises. Holter even argues that crypto was partly created as a pressure release valve to distract capital away from gold and silver. But now that confidence in fiat is cracking, those safety valves may fail, leaving only physical assets as the ultimate refuge.
With the amount of gold that was coming into Shanghai, was many, many, many multiples of what the government has raised. What are they at? 3,200, 3,500 tons, something like that, China officially. The real number absolutely has to be over 25,000 metric tons, and that's triple what the U.S. says we have, and we haven't audited since 1956. So I think clearly China has way, way more gold than they say they have. I think probably Russia too. And just go back to the old saying, he who has the gold makes the rules. And that's what they're preparing for. They're preparing for the dollar/bonds, treasury bonds to implode. And that if a country has no gold on their books, on their balance sheets, then they're stuck with that black hole of loss. Whereas if they've hedged and now have a good sized position in gold, what they lose on dollars, they're going to more than make up on gold.
Yeah.
If you were talking about silver rather than gold, I mean, there's no big silver. You can't make any big purchase of silver. I mean, it's not available. The world's been in a deficit for 5 years. The deficit is widening. And I mean, you can see it. You can see the demand in both gold and silver by looking just at the front Comex month each month, because you have, and I'll just use a round number of 100. You have 100 contracts standing for delivery day one. And by the end of the month, it's 150 or 200 contracts. And I know you remember very well, Andrew, the days back when there would be 100 contracts standing on day one and only 23 standing by the last day. You know, you'd have a lot of the front month contracts would bail out, they'd sell them and cash settle. That's not what's happening now. You've got buyers that are presenting their contract and say, hey, give me the metal. One tool, Comex futures, let's just use the word derivatives. They were able to bully the price of gold, bully the price of silver downward, while bullying or helping the prices of assets that they wanted higher, like bonds and stocks. They could bully those higher. Um, the the problem is, well, first off, let me just go back and say that I believe, and I think, tell me if you disagree or not. I believe that the contracts were originally issued, as you mentioned, to increase volatility, scare people, but also as a, if you want to call it, a pressure relief valve on the buying of physical gold and silver. I said the same thing when GLD and SLV were created. I viewed those as pressure relief valves. I mean, they don't have to own any physical metal. They can have all contracts. And I'm going to go one step further, and don't know whether you'll agree or disagree, but I believe that the crypto market was created as a pressure relief valve from gold and silver because they are viewed as an alternative, a dollar/currency alternative.
The message is clear. The window to position yourself before the big revaluation is closing fast. If gold and silver are about to break free from paper manipulation, the move could be violent, fast, and life-changing for those who are prepared. Question for you. Do you believe $50 silver by the end of the year is realistic? Or do you think triple-digit silver is closer than analysts admit? Drop your thoughts in the comments. I read every one of them. If you found this breakdown helpful, hit that like button, share this video with a fellow stacker, and subscribe with notifications turned on so you don't miss our daily updates. The next few months could be historic. Make sure you're ready.